So in last week's video, I told you about two things to watch for. And those things came true this past week, early in the week, and we got some great gains. The question is this crash, is this round of weakness over, or is this just a little bump in the downward trend? I'll answer that question, provide my analysis of the overall markets, and look at a stock that did really well this past week in this week's Trade of the Week. That's all coming up in this week's Stockscores Market Minutes. All right, well, if you watched this video last week, you'll know that I talked about two important charts to watch. Those charts were the ETFs of the Russell 2000. The symbol on that one is IWM. And on the Treasury bond ETF, the symbol on that is TLT. And the reasoning was the market's really focused on interest rates, and those are two charts that are very sensitive to the outlook on interest rates. Well, we had the Fed decision this week, and the language around that gave investors hope that the cycle of rate increases wasn't going to continue for long, and we might even see some rate drops. And so those two charts responded nicely from that, and we got this signal that I talked about last week, which was a break up from a rising bottom on the short-term chart. And if you remember last week's video, you'll know what I'm talking about. If not, go watch that video, it's on the channel. So this week now, I want to talk about what's next. Is this truly a bottom, or are we just having a little fake out with some nice gains? Well, the thing now to watch for is these same two charts, are they able to now break the longer term downward trend from rising bottoms? So let's take a look at those charts now. The first one here is the chart of IWM. And you can see that we had some great gains this week, which is what catches the headline, makes everyone think that the weakness is over. But the first challenge the market's going to run into is this downward trend line, which is where price is at right now. Now on the daily chart, we are coming off of lows. We were quite oversold, and that's why I thought the market was going to bounce back this week, which it did. Now my expectation is that we're going to pull back in the short term, most likely pulling back next week, because we are coming off of a low point, not off of a rising bottom. So what that means is that investors, they all sort of jumped in to buy and bargain hunt, and maybe some short covering happened very quickly. And maybe they overdid it a little bit in the short term. And so you'll see a little pullback as people sort of take some rational action toward the market. So expect a little bit of a pullback in the short term. But what we're watching for now is, can we break this downward trend line from a rising bottom? So if we pull back for a couple days, build a rising bottom, and then make another attempt at breaking that downward trend line after the formation of a rising bottom, well, that's typically how markets reverse. If we go back to what happened in the spring of this year, we had this downward trend line. We broke the downward trend line. We built a rising bottom, and then we broke the rising bottom, or broke up from the rising bottom, and then went on a nice 2-month run to the upside. So we'll see if that can happen here. Work to be done. Let's take a look at that TLT chart. Here it is. And you can see that the bond market also rallied. And what that means is that interest rates went down. But it too has simply risen up to the downward trend line. So it's likely to get stuck, but we do have the start of some rising bottoms building. I think we could see a little bit of a pullback and then come back up and break that downward trend line, and then we should start to see the markets heal. Now remember, seasonality wise, this is what should happen this time of year. Typically the markets are strong from sometime in October, November until May or June. And so here we are at the start of November. We're getting that first sign that the markets are bottoming and starting to show signs of optimism. All right, so we'll keep an eye on that in the weeks ahead. And of course, make sure you're subscribed to the channel, because I do this analysis every week for you. It's free. May as well tune in each week. Subscribe, turn on notifications, and then you'll get all of the updates. All right, let's take a look now at the other charts I like to look at. We'll start with the S&P 500 short-term chart. You can see really good gains this week, but here's another reason why we may see the market pull back early next week, and that is we've made this very strong rally into resistance And then at the end of the day on Friday, a little bit of weakness that maybe telegraphs a pullback early next week. Not unreasonable, doesn't mean that the market's in trouble, it's just what should happen. And it makes a little more sense again when you look at this weekly chart. We sold off and got oversold away from the trend line, and now we're going to try to come back up to it. It's a very common pattern, we see it all the time. I think we see a little bit of short-term weakness, but that doesn't mean that we are making a longer-term reversal. Here's the NASDAQ 100, same sort of downward trend line issue, resistance right in here, no rising bottom yet, so improving chart, but not great yet. How about those small caps? We'll look at it on a shorter-term time frame. Let's look at the 1 month, 60-minute chart. And here's the signal I told you to watch for last week. We had the downward trend line broken, we built a rising bottom, and then we broke up from the rising bottom on Wednesday. And then Thursday, the big gap up. Friday, another big gap up. That all started with the Fed announcements on Wednesday that really turned momentum to the favor of the buyers. Now looking at that 3-year chart, you can see that we're still in a downward trend. We're still building rising bottoms. We're not building rising bottoms. So there's work to be done there, but making a step in the right direction. How about the Canadian market? Let's take a look at the 1 month chart. A little better here, and unlike the US markets, it actually got through some resistance, and that emphasis on some of the commodities helps the Canadian market. Precious metals have been strong, and that's why the Canadian market hasn't really sold off as much as the US markets have. It's been fairly stable, kind of boring, but not trending down like the US market. So now it's starting to come back up. It should run into some resistance up in this region. Probably a little bit of a rotation as money perhaps moves out of that high-flying gold sector and into some of the weaker sectors like banking and things like that, which got quite oversold. Let's take a look at gold now, GLD. And here is that chart. You can see the real strong gains that gold had in the month of October. But the problem is, and here's the shorter term chart, it's starting to round out. So you can see the upward trend has been broken. We haven't broken down through any support yet. If we do break down through this support, expect a pullback in gold. And that's likely to happen soon because gold has rallied up to this longer term resistance level, which it has hit a few times. So wouldn't surprise me if maybe we get another week of upside, but ultimately I think we're going to get a little toppy here on gold. And so be a little bit careful on the long side with gold stocks. Looking at USO, we've got a 1 month chart that looks like this. This is oil, and it is moving down from left to right. So not through support yet, not terrible, but not great either. And I'm a little concerned about this weekly chart because we have a falling top and a break of the upward trend line on the weekly. So I actually think that oil is more likely to go lower than higher in the near term. Well, let's move to currencies. We'll take a look at the US dollar first. And of course, that expectation that rates may not go up as much as expected has hurt the US dollar. Bond market went up. US dollar goes down through some support. Looking at the short-term chart, the 1 month, you can see the big gaps to the downside, kind of the opposite of what the stock market was doing. And so we may see the US dollar topping out here and going to see a little bit of a pullback. Not the case for Bitcoin. Bitcoin I've had bullish for a little while now. When it broke from this ascending triangle back here, looked to me like it was likely to go higher. It's now in the upward trend. I don't think I would chase it here because it's gone up quite a bit already. You'd rather buy something on the break of a pullback as opposed to chasing strength. But if you are long of Bitcoin, if you are in it, stay in it right now. It still looks good. How about that bond market, TLT? Again, you can see the parabolic trend to the downside has been broken, starting to build rising bottoms, still below the linear trend line. So expect it likely to pull back before it tries to go higher. All right, so my ratings then. I've upped my ratings on stocks in the short term to neutral, still long-term bearish. There's still work to be done. Canadian market neutral on both time frames. Gold, bullish short-term, neutral long-term. Oil, neutral short-term, bearish long-term because of that break of the upward trend line. US dollar, I've lowered to bearish in the short term, neutral long-term. Bitcoin bullish on both time frames, and interest rates neutral short term and bullish long term. All right, let's get into this week's trade of the week, and I'm going to take a look at a swing trade and try to identify some of the key concepts that you should look at if you want to swing trade the stock market. And by swing trade, I mean holding stocks for a few days typically, sometimes up to a couple of weeks. So this is a stock that I first noticed when it broke here and started to trade abnormal volume. So that's an aggressive entry. We have a strategy that buys that, but it's a lower success rate when you buy that first break, especially when you're breaking up into pessimism. So that's not my preferable time to buy. I'd rather wait for the stock to quiet down and then come alive again. And it did that twice in the last few days. You can see here on October 31st in the morning, it broke with an action candle. It also did it at the end of the day on the 27th, but this was the signal that I actually jumped on the open of the 31st, buying right here, support right there. That's where your stop would go. And it's had pretty good gains this week. Even if you just took the single day move right there, that was nice, but it's still hanging in quite nicely and I think could continue higher. Now, I'm not saying buy this stock now. I want to just show you an example of how we use this action candle indicator to find our entry points. And the action candle indicator is my own concoction. It looks for abnormal price, abnormal volume. We apply it in a program called TradeStation. If you want to learn more about that, go to the Stockscores website, Trader Training, and you can learn more about the active trader approach and our active live service. I'll leave it at that. Hope you've enjoyed it this week. If so, click on the like button and let me know your thoughts. Do you think the market is bottomed or is there more weakness to come? Let me know what you think. And as always, trade well.